So Kirk, I'm in investment banking, you're in alternative investments. They're quite similar in a lot of ways, but they're also very different. Tell us a bit about those similarities and differences.
Sure. So let me start with the differences first. So the difference is alternative investments, you'd consider it everything as that's non-traditional. So everything outside the typical stocks and bonds. So whether that be gold or real estate or artwork or derivatives, which basically is a combination of the traditional and the non-traditional. So that's the difference. The similarities, however, is in stuff like structuring. So typically with investment banking, you provide services for your corporate clients. So whether they want to go the private markets or they want to IPO, they want a little debt, they want a little equity. What the similarities now with alternative investments is we can provide alternative investment solutions for those corporate clients. So we can provide private equity, private credit, and we can even fuse and incorporate the traditional with the non-traditional, so we can walk a corporate client along the pipeline. So with private credit or private debt or private equity into the traditional investment banking where they go the IPO route.
Okay. All right. So what I'm getting is that investment banking is typically more traditional type assets and securities, whereas alternative investments, the name, it lends itself to the name, non-traditional.
Yeah, non-traditional.
So underlined by, assets that are less common and less used in the industry. Okay. So what kind of clients look for alternative investments as opposed to your standard bond or investment banking transaction? So
the funny thing, Candice, that you mentioned, what kind of clients, but alternative investments is open to all clients. So big, small, medium, all clients, they're alternative investment solutions for all clients. So typically what we look for before any alternative investment solution, we'll kind of look at what is the track record of the company, what does the company want to achieve, and then we have a fit for purpose solution. So normally what I like to say about alternative investments, you can call it fit for purpose investment. And on the other hand now, alternative investment options are out there for our clients as well who want to get some sort of exposure to alternative investments. So I'm not a corporate client. I don't have a small, medium, or large business. Probably entrepreneurship is not for me. However, I'm hearing about this alternative investments thing and I want to get some amount of exposure. So what my role involves is the packaging of alternative investment products for persons who want to get exposure to alternative investments.
Right, and that ties into what you said as, alternative investments kind of falling under the investment banking umbrella. Part of our role here at Barita is to connect, the issue of securities with potential investors, right? So connecting those who have capital with those who need capital.
Right.
And so when you're looking at both the buy side and the sell side, we spoke a bit about the sell side being, issuers of securities, looking for solutions where alternative investments come into play. But tell us a little bit more about the buy side. So why might an investor want to get into alternative investments?
A couple of reasons. I can give two main reasons. So capital accumulation and capital protection. So normally the returns for alternative investments are more long-tailed. So if you're looking for more long-tailed returns, if you're looking for something that's going to pay off later down the line, also capital protection. So we're in the midst of some amount of economic uncertainty. You want to protect the little that you have. Alternative investments are not necessarily strongly correlated with the traditional investments. So, the equity market kind of taking a little beat up with the high interest rate environment, bond prices are going down. The alternative investment space or alternative investment assets do not necessarily share the same correlation with the traditional assets. So it forms or it gives some amount of capital protection for clients.
All right, so we've been talking a little bit about, what are alternative investments. I want us to make it more applicable to our clients. I want our clients to be able to identify what are alternative investments. Have there been any alternative investments in the market, recently? I know we just went through COVID, which was a bit of a down period for most, investors. But either, prior or post-COVID, have there been any alternative investments in the market that people may have, taken part in, they may have invested in, but they didn't know that it's alternative investments? Give us an example of one or two.
Sure, I can give a couple of examples. So as I mentioned with alternative investments, it's, everything that's not traditional.
Right.
And this example that I'm going to give is it's the mix of the traditional with the non-traditional. But the first example I'm going to give is, remember when I said a mix between the traditional and non-traditional. So in March 2020, right on the cusp of COVID, we had the Trans Jamaica IPO, which was a public-private partnership with the government of Jamaica. While it's traditional in the sense that it's equity, it's an IPO, and a lot of our investors would be familiar with IPOs. It's alternative investments in the fact that what you're investing in, the underlying, it's an infrastructure project. So it is not the traditional which we're used to. It's non-traditional in terms of the flows and all of that. So another one that I'm gonna give is something we did internally at Barita, where we did a private credit solution for one of our clients, and we were able to sell that private credit solution to clients who are looking to invest in alternative investments. So what you have is the opportunity for, in general, the persons in the market who are looking to invest in alternative investments. We are able to provide that solution with a mix of the traditional and also the non-traditional, like the examples that I provided.
Right. Okay. Yeah, because looking at the stock market, for example, we see a lot of companies within the manufacturing and distribution industry, within the finance industry, but we really don't see a lot of companies that are involved in infrastructure. Transdram being one of the first and one of the few that I can think of. But that's good to know. So given that the underlying assets are a bit non-traditional, as you just said, how does that impact risk? What does the risk look like for the investors in an alternative investment?
Funny enough, that was something I was hoping that we'd discuss. So what I want to speak about is risk-adjusted returns. So the risk-adjusted returns for alternative investments, when you check it out, the risk-adjusted returns are actually better than traditional investments.
Okay.
It comes with risk, no
As
doubt.
Most investments do.
Risk reward. So when you check the risk-adjusted returns, you have a better risk-adjusted return profile.
Okay.
So, however, what I want to speak about as well is that in an assessment of the perfect alternative investment solution and the alternative investment opportunity, one has to look at what risk appetite they are, or risk appetite bucket they fall in. So I'm more a risk-seeking individual. I'm young, I'm 20s young. So I can look for a private equity solution. I can hold it for a couple of years, knowing that on the back end, as I spoke about a little bit earlier, the long tail returns and some sweet risk-adjusted returns. Let's say I am not so young, not so 20s anymore.
A bit more conservative,
I'm looking for something more conservative. I'm looking for some exposure to real estate, whether directly investing in real estate or looking for an investment that gives me exposure to real estate, like say the Barita real estate fund.
Okay, so you'd have mentioned, I think, about 3 things that fall into alternative investment space. So you mentioned infrastructure, you would have mentioned real estate. I think at the beginning, you'd have mentioned gold. We just talked about risk-adjusted returns. How do the risks for those 3 that I just mentioned differ? Real estate seems to be very popular these days. We have quite a boom going on here in Jamaica. Not much on the gold front, quite yet. And we're getting there with infrastructure. Where do you see, opportunities for higher returns?
So, starting with gold first, precious materials. I'm an admirer of gold.
Aren't we all?
So, on the precious materials side, strictly from a Jamaican context, it's a bit harder to get into. So it's a bit harder to quantify the risk. The typical literature speaks to, in times of crisis or economic downturn, gold is normally a safe haven. Whether persons invest in a gold-backed index or gold bullion, the actual physical representation of the gold, or any form of company that probably does gold mining. That's a bit harder to get into. So the risks are a bit harder to quantify.
Okay.
In terms of infrastructure projects, let's look at like Transjam per se. The risk, in terms of quantifying the risk, where the risk presents is in the management, the initial setup and the management of the infrastructure project. So what persons have to be mindful about is what is the capabilities of the management team behind the infrastructure project. Somebody who has done it time and time again, done it time over, the risk would be less than somebody who's just starting, because infrastructure projects, they take significant capital outlay. Also, infrastructure projects take a lot of expertise to manage.
Right.
Now, real estate, which, you walk down the road, everybody said, so the apartment going up for how much million? Real estate is kind of a big thing now in Jamaica. The risk there now is, one, you have to know what type of real estate you're getting into. You're getting into the rental market. Airbnbs are popular now. Persons talking about buy, renovate, flip, or a person just talking about buying for wealth preservation. So each sector of the real estate market has a different risk profile. And in terms of how risky, it depends again on your personal goals and as well as the market that you're trying to play in.
Right.
So let's say you're going into the Airbnb and the rental space. The risk is getting the clientele to come in the Airbnbs. The risk is getting the persons to rent. Is it that the rental payments can be more than what you're paying in terms of for the mortgage? If you're looking at the buy, renovate, flip, sell, how fast can you have that moving? What's the length between closing the purchase, renovating, and then closing the sale?
The turnover.
Yeah, so what's the turnover there? So that's where the risk comes in. And personally, I believe there's some amount of latency and friction in that section of the market. So if I was to give a professional assessment, that would be a little more risky than the other sections of the market.
Okay, thanks, Kirk. I think you made some very good points there. So let me put myself in the shoes of an investor. So, as you said, I drive down the road and I see all this real estate going up. I see all these, road works, new highways. How do I get exposure to those? What kind of products? Who do I go to? What do I look for? What kind of investments can I use to diversify my portfolio and give me access to these alternative investments?
All right. So what I want to ask, how much money you have? So seriously though, it depends on what exactly your goal is. You just want to get some exposure. You don't have the 40 million for the apartment, but you want the exposure. You see that there is a nice real estate, a vibrant real estate market. You want the exposure. What asset can get you the exposure? You have to look. Let's say, for example, I can't necessarily get that 40 million apartment. I can't necessarily buy that 20 million piece of land.
Not yet, at least.
Not yet, at least. Where can I go for the exposure? I want to just plug the Barita real estate fund. Barita's real estate fund has a nice property portfolio in some very key areas around Jamaica, where the intention is to have those properties, develop those properties, and have the investors in the Barita Real Estate Fund benefit from the appreciation in value of those properties. That's an opportunity, and a very lucrative opportunity for persons who want to get exposure to the real estate space. And similarly to that, for persons who are looking at that space, try to look at what asset can get me some amount of exposure to that space. You're investing in a company. The company is letting you know that, hey, we are trying to foray into that. You go have an initial foray into the real estate space. You look at the company's track record with real estate. You look at the company's current real estate portfolio. You're pleased with what they have done. You have assessed the risk of what they say they're going to do. Have an initial investment in that company, and then benefit from those returns. Okay, good. So as an investor, depending on my risk profile and the funds that I currently have available to invest, you're saying I can either get direct exposure to alternative investments, whether I take a stake in a company whose business is infrastructure or real estate development. Or you're saying that I can, go to an investment bank like Barita, look at their funds and see, which of these funds kind of pool together alternative investments, different real estate properties, etc. But guys, you heard it here first. Visit Barita. Come talk to us about our real estate funds.